Right. Morning, everyone. Welcome back to our morning cuppa at 8. I'm Joseph here. So let's take a look at some of the headline news over the weekend. Right. Last Saturday, right, Trump said that he would review, right, the new plan that put forward by the Iran, right, and as US also fast tracks their 8 billion firearm sales to the Middle East, Middle East allies, right, and now, this morning, about 2 hours ago, right, we just learned that Trump have mentions to the reporters that the U.S. Will help to escort the ships to get out from the Hormuz Straits, right? He hinted that Iran have to cooperate, otherwise, he'll deal with it forcefully, which means this morning, right? That the US will try to break through the blockade by the Iran. But at this juncture, all right, US are still blocking the Hormuz waterways on the Iran ships. We just see how this develop on today's oil market. As of now, right, the oil price has been moving lower, right? Last Thursday and Friday, the oil price have pulled back, right? And as of today, right, the oil also showing sign of corrections. Now, as for the equities market, right, the Hang Seng Index continue to show consolidations between the 26,600 point and 25,100 point level. Now, we keep our stop loss or resistance unchanged at 26,600 point. As long as stay below the 26,600 point, we'll keep the bearish bias unchanged. Now, over here, you also can see that the RSI has deep below the 50% level, showing that this very short rally have coming to a pause at the Hang Seng's reverting to a consolidations, right, or sideways movement. Now, meanwhile, looking at the weekly price actions, you can see that most of the Hang Seng component stocks stay in the negative territory. Now, apart from 981 Semiconductor International Manufacturing International, the Chong, right, went up by 18%. 883 oil-related counters together with its 5 7 Sinopec, right, have went up almost 10%. Then on the insurance counters like AIA and Ping An are also close in a positive territory, right? And as for the trading stock this morning, we continue to follow the 981, right, since the momentum remains strong. So after breaking past 68 Hong Kong dollar, the next R1 will be 77, followed by 85. Downside support is at 60 Hong Kong dollar. Now, secondly, AIA Group, right, although there was corrections on Friday sessions, but this juncture, right, AIA managed to climb above the 21 days moving average. As long as stay above 85 Hong Kong dollar, the breakout point, right, AIA may attempt to move higher towards 90 and followed by 95 um, levels. Downside support is at 80 Hong Kong dollar. Okay, and looking at last week also, the US Fed had their rate meeting, right? They keep the interest rate unchanged to 3.5 to 3.75, right? But looking at the vote, right, it was a very rare split. Eight have voted for all the decisions, whereas there are four members have voted against. Now, three of them actually mentioned that Fed should not give easing bias forward-looking statement. They think that the risk of inflations are lingering in the market, right, and should take away the easing bias, which means that they hope that the Fed will not give the public a view that next meeting there's likelihood of a rate cut, right? Then on out of the 12 members, only one Miran have actually voted for deep cut on their interest rate, right? And so last week nothing much changed, right? And we look at the consensus market now thinks that the next meeting, which is going to take place on June, right? 92% think that the rate is going to be unchanged at 3.75, the upper limit. right? Meanwhile, we look at the year end, right? December interest rate level, right? You can see that coming to the year end December, right? Last week we saw about 75%. I think that there's no rate change. This week, there's still about 70% thinks that year end will be at 3.75. But after the Fed meeting, right, about 13% of the total, right, have shifted to things that there will be one rate hike this year. So there will be either one rate hike or one rate cut, and this year, but majority thinks that the rate is going to be unchanged this year. So this is still very fluid, right? But this expectations for the year end interest rate, right? Definitely it's going to move the valuations on the equities market as well, right? Looking at the commodity based on the last Thursday price actions, right? You can see that the crude oil are still trading between 110 and 95, and overall we keep our stop loss at 88, right? As long as the crude oil stay above 88, we'll keep the bullish bias unchanged. Now, meanwhile, the gold, right, have a series of corrections last week, but tracking the positive sentiment on the equities market, gold also have a mild rebound on the Thursday and Friday sessions. Now, looking at S&P 500, right, sentiment remains risk on right now, right? I can see that the S&P 500 are moving higher high and higher low. Looking on the weekly performance, funds continue to move into the chips, Intel, AMD, right? And then on the big internet giants, Google, right? But Meta have their latest. There are two things have actually impact Meta negatively. One thing, number one is their results are slightly below the expectations, and then on the China have just veto their latest acquisitions, right? And meanwhile, market continue to have higher valuations or higher premium on the memory related counters such as SNDK, Micron, right, as well as the Seagate memory companies, right? And this week, today, right, we'll be looking at two counters. Firstly, the ABNB, right? ABNB is going to announce their first quarter results coming this week, right? Based on the price actions, you can see that share price have trading above the price volume profile here. So I think that the bulls still have a technical advantage right now. Nevertheless, we have support to mitigate our downside risk, which is 137. So in the event that ABNB break above 143, and then on the bullish bias will be confirmed, it will be moving towards the 150 and followed by 160, right? Then on, right, looking at the another counters, Fortinet, right, which is the one of the peers in the cybersecurity space. They are also going to announce their results coming this week, right? And as of this juncture, Fortinet have a break past the resistance of 85 US dollar. The next resistance will be 90 and followed by 95. Now, after Fortinet have really announced their result this week, then on we shall see a group of cybersecurity companies such as Datadog, CrowdStrike, the Cloudflare, right? And this Palo Alto, they are going to announce their results in this week and also the following weeks. So I think that in terms of timing, right, FTNT will be the first bellwether, right? Then on, we shall see a few more cybersecurity counters to announce their results. So this gives us a window of trading opportunities on the cybersecurity counters. So Q&I on this sector, which is cybersecurity, I think the opportunity to trade or to seize the results window is actually over here right now. So for FBM KLCI, still remain a bullish setup. Right, last week, property, industrial, transport have garnered the market attentions. We still keep a bullish bias on the FKLI, and we have downside support at 1690 and 1650. Now, FCPO, we still keep a bullish bias with 4,004 as our downside support level, right? And meanwhile, on the trading stocks, firstly, we'll be looking at KBJ Healthcare, which break past 3 cents. Next hour will be 3 and followed by 3 Downside support is 3 Secondly, we have MBM Resources, climbed above 5 Next resistance will be 5 and followed by 5.50. Downside support is at 4 and 90 cents. So we have breakout stocks, KBJ, and followed by MBM Resources. So I'll stop here and pass on to Xian Yong on the weekly report on the economics team. Thank you.
Thank you, Joseph. Let me share my screen. So, morning everyone. Thanks for joining the call. Currently, we can see that our risk index still remain on this one in territory, showing some continue improving, but there's a trade-off slightly, where the U.S. and Iran negotiations have not going smoothly, as pointed out by Joseph just now that this is still made in talks lead the index slightly pointing towards out. And also, news suggests that U.S. will allow some humanitarian aid for those ships that are still through to pass through the Hormuz. But the oil price continues to stay high around 107 to 108. So we'll look on and see what will happen into coming this week. So other than that, on the Fed front, we still continue to expect one cut by end of this year, where the risk of rate stay unchanged and stay increased, driven by higher energy price and also prolonged blockade in the Middle East. Uh, One key thing we have to point out also as pointed out by Joseph just now that the meeting has been highly split, 8-4, where three people has opposed anything that is in bio in the statement, and another with Stephen Maron has voted rate cut. We think that coming into the year, market really depends on how the inflation and also the economic growth going on. And current risk is point toward low cut for this year. Even there's a opportunities for a market pricing for pricing a high in the coming in the end of the year. Looking at China, let's move toward that. So, China PMI has continued to show an accelerating, especially in manufacturing part. But we can see from the left-hand side chart here, the non-manufacturing PMI has fallen to the lowest point started since December 2022. And also, you can see that MSCI China has continued to fall and underperform the global benchmark with the equity and fund flow, most of it continued to uh, lackluster into March. If you look at the Shanghai Composite Index, so the biggest losers are financials and consumer loans. So another news on the OPEC, where the UAE has announced they will leave the organization effective 1st of May, and also as their position as the third largest oil producer in OPEC, they signal that they were likely to act flexibly on oil production and without the OPEC oversight, where it's accounting for around 2.9 million barrels per day. And also, due to that, oil price has remained high despite the news. And also, OPEC themselves has announced a symbolic raise in the production after the UAE announcement to leave the organization. So that's all from me. I will pass on to the next speaker. Thanks.
Yep. Thanks, Yong. Hi, everyone. So for me this morning, I have a note on the banking sector. This is with respect to the March Bank Negara statistics. So if we look at the March Bank Negara figures, I think what we saw was that system loans growth picked up pace to 5.4% year on year, as compared to the 4.5% to 5% range that we saw in Jan as well as February of 2026. Of note, the pickup in pace was actually coming from the loans to business segment, which was up 5.6% year on year. And in turn, this was actually driven by working capital loans. Hence, we think that in March, it is possible that businesses started drawing down working capital lines. This is because of the Middle East conflict and the resulting higher energy as well as commodity prices. So it could be due to price increases, or it could be due to businesses stocking up on inventories, for example. But generally, it was the business segment that drove loans growth. Household segment loan growth remains quite stable, about 5.2% year on year. Turning over to the leading indicators, where we look at applications as well as approvals, we note that the business side loan applications was up 8%, and business loan approvals rose 26% year on year. This was to the transport, storage, and communications, finance, insurance as business activities, as well as the real estate sectors. So as these approvals get converted to loans, that should be supportive for loan growth ahead. Hence, we are keeping our 5 to 5.5% system loan growth forecast for this year at this juncture. In tandem with the pickup in loan growth, system deposits also grew by a faster pace. It was at 4.2% year on year in March. And this was actually driven by CASA. And that helped lift the system CASA ratio to 32.7% from 32.3% in end December last year and 31.3% a year ago. Loan to deposit ratio, this came down slightly to 88.6% from 89% in the fourth quarter, while the liquidity coverage ratio is still healthy. On asset quality, ratios actually remain quite stable. The gross impaired loan ratio stable at 1.4%, and the loan loss coverage ratio 83%, just slightly lower from 84.8% in the December. But generally with the provision buffers and overlays that the banks have in place, we think that the bank should be in a good position to manage any potential asset quality issues. Overall, no change to our overweight stance on the sector. Our top big banks, we have actually divided it where we have a mix of defensive names such as Public, Maybank, Hong Leong Bank. This is to help investors right through the uncertainties. While we also have some laggard names in there such as CIMB and AMMB. This is banks we think, share price should be a bit of a catch-up in performance as macroeconomic worries from cost pressures start to ease. So overall, we continue to stay overweight on the banks. Top picks, Public, Maybank, and Hong Leong for defensive, and CIMB and M for, a play when macro conditions look better. That's all from me. I will pass you to our next speaker, Adam.
Okay, good morning, everyone. So today we have a company update on IGM Corp, just to highlight on its very timely delivery of its data centers. So we actually did a compilation in terms of the timeline that IGM requires to deliver its DC projects, and based from what we have compiled, it seems that from the point of the award date for the data center contract, IGM usually takes about 8 to 11 months for them to reach the topping process, which essentially gives them a headroom of about, say, 6 to 8 months before the real completion. So basically, topping process means that the structure of the building or data center in this case has been completed up to the roof level, and what is essentially needed after the topping process is just the internal fit outs and the fittings of the respective servers into the data centers, which review doesn't really take much time. So because of that, we think that IGM is also up at par with its key peers such as Gamuda and Suncon, and it has already secured up to 5.1 billion worth of data center contracts to date. And order book currently is made up of about around 50% is coming from data centers. And I think we think that, looking ahead, it would stand a high chance to grab a pie of the DC opportunities, maybe not just in Klang Valley, but perhaps in other DC hotspots, namely Johor or even Negeri Sembilan, for example. We think that IGM is steadily catching up with its peers, and we still remain optimistic on its construction arm, but we think that its property arm, IGM Land, will continue to see some headwinds with the 9-month FY26 results, seeing its property arm recording a core loss a loss before tax versus a profit before tax a year ago. So we think that the major profit contributor to continue being the construction arm. So with that, we make some tweaks to our property arm projections. Hence, we slash our earnings estimates by 12%, 6%, and 2%, and we reach a new SOP derived TP of 3 ringgit and 20 cents from 3 ringgit and 43 cents. So that's all from me today. Thank you everyone for dialing into RHB Morning Kappa at 8. We will see you tomorrow at the same time and same place. Have a great trading day ahead. Bye-bye.